Staying with the US, it's been a tough few years for retailers as they've battled supply chain disruptions, hiring challenges, and rising inflation. Entering 2023, those in the industry hope some of these issues are subsiding, but major economic headwinds remain, including the threat of recession. William Denselow reports from New York.
Inflation has been taking a major bite out of people's pockets in recent months. December's Consumer Price Index revealed food costs rose 10.4% compared to the previous year. Consumers often have to absorb those costs. Some companies in the retail sector have been trying to develop solutions to reduce costs. Using AI and analytics to forecast demand and manage inventory, retail technology firm InvaFresh helps grocers improve efficiency and cut down on waste. They say consumer demands have changed due to those price pressures.
Inflation hasn't necessarily stopped us from eating. We still need to go out and buy groceries, but it's what we're buying that's changing. So no longer are we getting the premium items that we were accustomed to that are high margin to our grocery partners. It's really now more the lesser margin items, the items that are more staple and regular, but obviously at a lower price point.
A combination of high inflation and rising interest rates is having an impact across the retail sector. Retail sales in the US contracted in both November and December, renewing fears that the economy may slide into a recession this year. That could mean more penny pinching and quieter high streets in the coming months. But economic data suggests that price pressures may be starting to ease. Some analysts at the recent National Retail Federation Expo suggest there are promising signs for US consumers.
2023, less excess savings, going to be less of a driver for consumer spending, but wages are stickier than inflation. So we have inflation coming down towards 3%. Wage growth is also coming off, but slower. And so what we're actually going to see is real income growth for 2023 and positive real wages in the back half of the year.
But the health of the labour market remains uncertain. The unemployment rate has been down near historic lows in recent months. But some analysts say roughly 70% of Americans are looking for extra work, largely due to the impact of inflation. ShiftSmart provides a platform to help companies find workers.
As economic conditions tighten, we're seeing a lot of interesting impact on both sides of the equation for ShiftSmart. For employers, there's a need to be more responsive to demand, the ability to flex up and flex down, and engage in a more flexible workforce has proven to be a continuing need.
Analysts believe action from the Federal Reserve this year will have a direct bearing on the retail sector. Raising interest rates may help cool inflation, but could slip the economy into reverse. Some economists say China's reopening could also have a big impact on US retailers.
China not only is the world's factory, it's also the world's second largest economy. So as their supply chains kind of go back to totally normal, also their demand will hopefully pick up and Chinese consumers and they'll go out and start buying stuff.
Many retailers have had to offer big discounts in recent months to attract inflation-conscious consumers. And with a possible recession looming, the sector is now bracing for another uncertain year ahead. William Denselow, CNA, New York.